Stocks are surging as that ceiling gets lifted. The S&P 500 index is approaching 52-week highs. The ETF with dividends is already at 52-week highs. I think the precious metals will continue to pull back as dollar is not, don't think is done yet surging. Oil likely will advance towards $85. And we will discuss the ever popular topic of natural gas as it approaches multi-year lows. These and more topics in this edition of MasterChartsTrading.com for June 2nd, 2023. As always, please don't forget to hit the like button, subscribe to this channel, share this video with others. Your likes, your shares, your comments is what keeps this channel going. If you are a subscriber, stay tuned, there's going to be a separate video. Looking at a weekly chart of S&P 500, weekly just means that each candlestick is a week's worth of activity. If you are freaked out by the candlesticks, we can make it a line. Line just shows the closing prices, so it doesn't show the intraday fluctuation of a stock, what's happening on the stock market. But with a even with closing prices, you could kind of see, although it is a little bit difficult to see, that this is a 52, this is a August 2022 high, and today we closed, or rather we're approaching that level. So the closing prices are actually quite close. And this is index, S&P 500 index, symbol SPX, and make sure it's the one that's this one right here, CBOE on TradingView.com. This is a TradingView.com interface. So we're very close to 52-week highs. I mean, this is a closing 52-week high, so we are not yet above this August 2022 highs. However, notice that this is an index, meaning that the dividends are not taken into account. If we take dividends into account, and we're right now looking at S&P 500 ETF SPY, so the ticker symbol is SPY. Notice that with dividends, and how do I adjust for dividends? Where I'm hovering on the right side here, it says ADJ. I can click it, and when it's blue, that means I clicked it. If I unclick it, you can see the prices are different, and we're now following the index exactly. So notice that we're not yet above the August 2022 highs. If I click on adjusted, you can see that we made a new 52-week high. So why 52-week highs are important is because, as I keep saying, when a security, and this is an all-important security, probably the most important security in the world, S&P 500, when it hits a 52-week highs, it tells many people who are sort of on the sidelines and didn't yet jump in to catch this move, saying that, well, I think it's time. It's time to jump in because 52-week highs produce more 52-week highs, as more people are thinking, oh wow, we better catch up, we better jump in. So looking at the daily chart of S&P 500, this is an index once again, so ticker symbol SPX. On this chart, as you can see, there are also green, blue, red, and yellow lines, which are my proprietary MasterChartsTrading.com price action indicators, which you can find out more about by going into the description of the video. On this chart, you can clearly see a breakout of S&P 500 into a new uptrend. How do I define an uptrend? I define an uptrend when a security, in this case S&P 500, closes above this blue support resistance line. It occurred on Thursday, the 13th of April. I don't have to know anything about anything to know that a security has entered a new uptrend. Okay, this is all I really needed to know at that point, and I say, okay, this is it. We need to start buying for sure. Now, if you are a long-term subscriber or you listen to my previous videos, I was already having doubts that we are going to continue lower back in October for various reasons. Some of them are not necessarily technical, I mean, this is a technical trading. You can see that there is absolutely nothing on this chart besides various indicators. Technical just means that I don't really take into account anything like price to earnings ratio, inflation indication, job reports, etc., etc. I only look at the price and the way the price interacts with my indicators. So back in October of last year, I was already questioning this entire bearish rhetoric, and when I get to NASDAQ, I'll actually show you my position. I did take action on this, on me questioning this bearish rhetoric. As of right this instant, looks like we have indeed cleared multiple important levels. So let me show you this on ETF SPY. So ETF SPY, once again, ticker symbol SPY. So the new bull market, again, with dividends, where I'm hovering, it says ADJ, it's adjusted. With dividends, the new bull market started on 2nd of February. Okay. Without dividends, the new bull market started on 13th of April 2023. So let's look at with dividends. So the breakout occurred back here in February. Confirmation of this breakout occurred back here in April of 2023, this year. And now we took a while, really. I mean, I remember I was so frustrated back from April, actually late March into April, up until about right there 17th of May, until finally right there 18th of May, Thursday, a couple of weeks ago, we finally broke above this February highs, and I was like, yes, finally we're through this very important level. Small pullback, and now a surge towards 52-week highs. These are 52-week highs with dividends once again. So as I said, the new 52-week highs will lead to more 52-week highs. This is excellent news. We are long S&P 500. We're long NASDAQ. We will most likely continue keeping our bullish outlook. Very briefly, I will discuss the potential for what's going to happen in the maybe 2023, maybe in 2024, although we might actually break to new records quite soon. I'm really impressed with the way we have moved. So notice that we moved from, we can see how far we moved from the lows in, this is October 2022 lows. This is the most depressing time, I think, for me in a very long time, because of the way the war in Ukraine was going. I have been to Ukraine many times. I grew up, parts of my life I grew up in Ukraine. My heart was literally hurting, and then this low actually was the lowest point of the war, I think, in October, after which Ukraine turned around and we started making gains there. So overall, it sort of parallels this whole disaster in Ukraine. From the October lows until now, we moved 22%. This is quite significant. We are, how many weeks? We moved that much in 33 weeks. So not even a year. We're currently about, let me see how much, 13% away, maybe even less, like 12% away from all-time highs. All right. Now, I got quite a bit of flack for this. People were saying, well, no, we're not going to new records. This is not possible, with all the problems. And if we get to new records, then inflation will be insane and whatever. We're we're going there. Okay, we're making 52-week highs. Record highs are not that far off. So very briefly, I wanted to show my thinking about where this is potentially going in a longer term sort of scenario. So notice that the depth of this pattern from October lows until potential new highs, and we need to just break above the January 2022. The depth of this pattern is 37%, or about 1,300 points, about maybe a little bit over 1,000 points. We came from the pandemic lows, topped out in January 2022 when the war began, bottomed out in October here of 2022, and now we're again approaching records. So this is a very classical sort of pattern where we move higher, surge higher, we pull back, and then we trade maybe sideways, break to new records, and then the important thing is here is that we're going to duplicate the depth of this pattern. So they call it a range flip. This is a range, and we're going to flip it to the upside. So we're looking somewhere in the vicinity of S&P 500 6,000, maybe in early 2024, maybe even as early, maybe as early as late 2023. This is just a potential scenario. Obviously, it's, there's no way to know this, but if we break to new all-time highs, then it's quite possible that this will happen. I have already said this in the past, so I'm just reiterating this thinking. On a very, on a relatively short term, this is NASDAQ, NQ1 exclamation point on TradingView here. So I marked this pattern. So we have this white dotted line, and then the white solid line, and then another white dotted line. So this white dotted line on top here is simply a duplication. I duplicated this bottom line. So this is again, very similar pattern to what I just drew in. I'm going to draw it in again. So we have a surge, we have shallow pullback, we have a breakout, maybe trading sideways a little bit, and now we have another surge. So it's a classical kind of pattern. This is sort of like this pattern from February into March and ending maybe here in April. It's a cup and handle pattern. Okay, and also I am looking at this move up, sideways pullback, and then move higher. This is a very kind of classical sort of pattern that happens quite often. I predicted this particular breakout, this white thing, this white lines I put in March of this year. We hit that prediction pretty much on the spot. Today we actually are already above that level. So I went ahead back in January of this year. So once again, it is October low 2022. I was already questioning this whole bearish rhetoric, especially I'm going to show you this big, huge candle on November 10th. Does anybody remember what happened on November 10th? Why was it this enormous candle there? Maybe make a comment. So we bottomed October, and then we had this big green candle. I was like, something is going on. We pulled back a little bit and then went above my yellow line. So I went ahead and I bought myself. I just bought QQQ itself on January 20th or January 20th right here at $280. This is actual NQ. This is I'm going to show you QQQ, the actual trade I did. So this is where I bought it on January 20th at $280.26. It's currently at 354.65, so it's a 26% gain. Obviously pretty happy with this result. I don't normally do this type of trades. I don't normally buy at the bottom. I would usually buy where I'm hovering on breakout above the blue line. But this was just such a low risk entry. And why was it a low risk entry? Is because where would I put my stop? So I would have put my stop at new lows. So this is about 6 to 7% maybe 8% stop. So a risk was very low. The gain clearly was potential for a gain was quite large. In this case, it was indeed very large, around 26%. So some of my subscribers obviously are long. If you opened based on my idea here on YouTube, also make a comment, and of course don't forget to hit the like button. Russell 2000 small caps index, one of the weaker sections. So, but still, because of the correlations between the various stock indices, it's still a the stocks do the same thing as other stocks basically. So the breakout for small caps, I'm hovering over it, occurred on February 1st. How do I know? It just simply closed above this blue support resistance line. That's really all I needed to know. It was quite a deep pullback. The Silicon Valley Bank collapsed here in early March. However, notice that no matter how much the bears tried, and they tried pretty hard, there was no breakdown below this yellow support resistance line on 13th of March, on 20th of March, 23rd of March, 24th of March, and then finally on 4th of May. There were multiple attempts to break below this yellow support resistance line. They all failed. Okay? This means the support held on multiple occasions. I put in here, support held on multiple retests. And then finally today we surged, and it was a big, just enormous surge above these highs from March 10th, April, and mid-April, and then finally this high from 23rd of May. So this, if you're a bear, you want to put your stop somewhere, and usually they put their stop just above the previous highs. So today we took out all of those stops. So previous highs were here above the, for example, 23rd of May high, maybe even above the 18th of April high, and today was this, let me see how much, it was 3.5% surge. We took out all of those stops. So this means that the road is clear, I think, to advance higher. The blue line right there where I'm hovering is at 1885. So my breakup, my system will buy at this point again. You can see it bought right there, and it did not get stopped out back on this drop into as late as May. So another opportunity to be buying. I mean, we can even be buying right now, but the system says, okay, buy on close above the blue line. We will get there most likely very soon. So good news on all fronts. There is good breadth. In other words, we have a movement by large cap stocks that are going higher and movement by small cap stocks. There is correlation all around. In this case, finally, we are all firing on all cylinders, so to speak. Switching gears, we're looking right now at dollar index, DXY. You can trade this DXY in other countries. In the United States, you cannot. However, you can trade UUP, should you so desire. If you're going to trade UUP, please do not analyze UUP using my indicators. Always use the underlying DXY. So looking at this currency index, DXY is currently in a downtrend. Downtrend began in January of this year. Notice the close below this red support resistance line. Confirmation in March. Actually, we moved to almost to new lows. We almost broke below this February lows. However, we didn't break down. We held support. So notice right there where I'm hovering on 13th, 14th of April. We came exactly to those levels of February 2nd. I just drew in this line, this white line. We held support here, and I said we're going to surge. This blue line I put in May, early May of this year. I think we are not yet done surging. I think the target for this bounce is at my red support resistance line, which is at 106. It's about 2% away from current prices of where we're at. So I think dollar will continue surging. If you trade gold, you better look at what dollar is doing, because gold is traded, in this case, in dollars. You can also look at gold versus euro if you trade in euros. But in this case, XAU divided by USD. Notice this currency pair. So if you trade Forex, then you trade currency pairs. You always trade something against something. And gold is no different. It's also like a Forex currency pair, foreign exchange. So gold XAU divided by USD. If the bottom part of this equation, USD, or in this case DXY, the dollar currency index, is getting bigger, it will pull this currency pair lower. So notice that we made a high, intermediate high, almost an all-time high actually, for gold in May here, and pulled back. I put in this blue line back in April of this year, where I don't think we're done. I think we're still approaching this blue line. I think the blue line is the charm. This is, notice, before we bought there. This is a good place to be buying, basically. So I think a pullback of another 2.5 to 3% for gold towards around 1890 or 1900 or so is quite reasonable, because dollar is not, I don't think dollar is done. I think dollar will continue surging. We will see what happens once we get there. So notice before it was a very similar pattern. Dollar surged towards the red line and finally closed below it, where I'm hovering on 13th of March, and then it continued lower. So I'm looking for something similar. We need to get to the red line, touch it, and then close below it. So at that point, I would say, okay, most likely we're done. So we may be thinking about buying gold at that point, but not yet. So gold related are suffering. I had my position of Royal Gold. I'll show you very briefly. I had Royal Gold. I bought back in January. I sold. I took profits back in April, and then finally I got. Notice how it got slammed basically, and I got stopped out. So I took profits, and then I moved my stop to entry, and then I got stopped out, but still at a profitable, because overall I had a profit. Not all trades will do, will go to huge profits. Some trades will have, small profits. So I'm not in a hurry right now to re-enter my positions, my gold position, because I'm waiting for dollar to bottom. I'm sorry, for dollar to top and for gold to bottom. And like I said, I think gold will continue lower towards around 1900, possibly slightly lower to like 1860, maybe even 1850. So let's watch for top in action for dollar and bottom in action for gold. If you have any questions, please make a question, send me a message. And don't forget to like this video. Oil, important, obviously important still. Unfortunately, we're still fighting over oil. Their energy is still, we're still burning dinosaurs, but what are you gonna do, right? We don't have yet an energy breakthrough, so we're still doing this. Oil has attempted to bottom in March of this year, surged, and then collapsed. So actually made a new low. But this is a potential, this looks like a hammer candlestick where I'm hovering. On 4th of May, a hammer candlestick. So this is candlestick analysis. I urge people to kind of learn it. If you are serious about trading, then you really need to know what candlesticks are and how are they, how people are thinking, how people think. So a hammer candlestick simply means that we have a long shadow out of the bottom. So I'm going to read it to you. So we opened, we'll go from left to right. We opened at the bottom here, because the candle is green, that means we opened at the bottom of this real body. This little thing is called real body. Sometime throughout the day we collapsed, and then the bears came in and pushed the prices higher. Sometime during the day we went higher. We don't know if it was the opposite. First we went higher or lower. Sometime during the day we went higher, and then we, at the end of the session, we closed above the open. That's why the candlestick is green. If the candlestick was red, it would be the opposite. So why is this a hammer candlestick? Because it looks like one. It just looks like a hammer. If you grab this handle, then you can. This is a hammerhead. Okay, hammer candlesticks, especially at the bottom of a range, especially if they're at new 52-week highs, could indicate that we're bottoming out. So I drew in this blue dotted line sometime this is the 5th of May, and I think we will continue higher. So we need to work off this oversold condition. So oversold meaning that we sold off. I mean, the oil is in a downtrend. Oil began its downtrend where I'm hovering right there on 16th of August. How do I know? The only thing I needed to know is it closed below this red line. That's all I really needed to know. Before it was in an uptrend. We were buying it. Okay, up arrows, you can see. Then it turned around. Okay, sold, selling, short, short at the red line. It went lower, Now I think it may have bottomed, or at least temporarily bottomed. I don't know if this is a turnaround into a new bull market, new uptrend. New bull market for oil would be above this blue line, which is at 101. Okay, what would it mean in the world events? I don't know. Something bad, most likely. I don't know. What do you think? Make a comment. If the oil gets to 101, what would it take for oil to get to 101? Right now, I think we have bottomed. I think this is a bottom in action. So notice on I'm gonna kind of zoom in right there, big red candlestick on the 30th of May, follow through on the 31st, but then a turnaround. So this pattern on daily candlesticks, again, not a big deal. 31st of May, 1st of June. Okay, notice this big green candlestick is engulfing this previous red candlestick. So this is a bullish engulfing pattern, right? How do I know all of this? You can learn. You can go to MasterChartsTrading.com. I used to spend so much, time on this site. It's a great site. Go to chart school and just learn about this stuff. Chart analysis, so candlestick, candlestick analysis. You can read about this. It's not hard, but it is important if you guys want to learn about trading. So looks like oil has bottomed. I think we will keep pushing higher. I think this level around 86, so I can project my indicators into the future. I mean, notice how they're kind of coming down. So, and this is into August actually. It's quite a ways off. So maybe, I mean, right now my target is 86, but we'll see what happens in a few weeks. So at the very least, we're looking at a continuation of a bounce. So we're looking at, I don't know, from today's prices, possibly around 13%, maybe 15-16%. Like this highs from April might be retested. Okay, but my point is we're in a downtrend. Okay, oil is still in a downtrend. That means that we're bouncing up within a downtrend. This is a classical scenario of getting short. I want to sell short this security once there is an overextended condition in the opposite direction of where the primary trend is. Primary trend is down. I want to see an overextended condition into the opposite direction. This will happen currently around $86. We're right now at 71. So we're looking at $10-15 higher before I will even contemplate selling short. And the topic that everybody wants to know, natural gas. What to do with it? I tell you, this chart is just, I don't know, nasty, basically. We shorted it. Natural gas was in an uptrend back in 2022 September. It turned around where I'm hovering right there on October 18th. Again, how do I know? Is because it closed below my red line. That's really all I needed to know. Notice again how it retested this blue support resistance line on 23rd of November of last year, 2022. It touched it. So if you had my lines, this would have been like no risk entry whatsoever. You can just buy it here and put your stop just above the blue line. Man, look at this move. I actually was able to sell it short. I shorted it myself by buying, I think I bought put options on UNG on 19th of December here. I got in and I got out relatively fast, so I don't remember exactly where I got out, but I think the gain was about 50% total. Notice that it continued lower, so yeah, it was a big thing. It was just a complete and utter collapse in natural gas prices. Clearly Russia didn't like that. What are we doing now? We're bouncing along the bottom. Right now we're looking at a potential retest of the lows. This is the low where I'm hovering from April 14th of this year. We're 9% away from those lows. I think if we break those lows, we can duplicate the depth of this pattern to the downside. So depth of this pattern to the downside is huge. It's like 30%, or about $1 basically, if we break to new lows. And we haven't done that yet. So something like that. So about $1 down. We're looking at the $1. So currently the price is $2, 2.17. If we break below this April 14th low, then I'm fairly certain we will just continue collapsing to like $1. Yeah, so not a great looking chart. Let me know what you guys think. Am I overestimating this collapse? Potentially, I don't know. You tell me. Thank you for staying until this end of the video. If you have not yet signed up, then head over to MasterChartsTrading.com. Click on sign up. So if you're looking for my indicators, the trading indicators that I'm showing you, those green, blue, red, and yellow lines, you can pretty much trade anything you want. Then sign up for that. They're $29 per month. If you want the newsletter, so newsletter, I send out daily alerts about various securities. For example, QQQ, I sent out this alert. I sent out this alert as well from April, and the alert from January. So position is now up 26%. This is a daily alerts and weekly recap video. So this week we will cover multiple stocks. You can see there's quite a bit of various stocks, the ETFs, the bond ETFs, the world ETFs, some of the large caps, and of course some of the speculative stocks that we cover. This time we will cover a few weird ones. I've never even heard about this, but maybe you have. C3AI, Cypher Mining, EOS Energy, Fastly, Happyon Pharmaceuticals, Joby Aviation. I heard about that one. There's many different interesting stocks that they come up on my scanner, and I'm like, okay, I'm gonna send them out to my subscribers. Of course, the best deal to get is a trading indicators and newsletter together at $59.95 per month. It's a steal, and you will make your money back, I don't know, within a couple of trades, basically, hopefully. Alright, that's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video, and make a comment if you have any comments. Thank you. Bye-bye.